I'm Virginia McGathey here on the floor at the CME Group reporting on the livestock market today. Cattle rising again. Really, we're so happy about that since we had the limit move on Friday that we had a little bit of continuum. The cash prices were up last week. That really has everyone positive and really bullish on the live cattle market. It's a short week and it's really stirred some cattle buying. The market seems to be shrugging off any of these beef tariffs that we're worried about that are supposed to be implemented on Friday. So the market is really starting to get ahead of steam, and in spite of the fact that the U.S. dollar index was up. But interestingly enough, what that's done is really pushed corn lower. Corn was down double digits, over 10 cents, and that spiked the market. Of course, feed prices would be a little bit cheaper, and that's going to get the market up. And so that sell-off is helping the live cattle market really move higher. Feeders were also up. Those processing margins are supporting this rally and continue to move it. It just tells us there's a lot of optimism on the horizon, in spite of all the negativity around commodities right now. So the technical buying is coming in. It's kind of got the short covering, off to a scramble. A lot of these traders said, whoa, the market is really starting to move up. We're crossing over a few technical numbers and getting a little more follow-through buying. And when we're crossing the 100-day moving average, that's got everyone's attention. And so the market is still trying to move higher, and it's solidly up right now. I don't know how long it's gonna stay that way, but for the middle of the summer, we're looking pretty good. Not so much on the hog side because the market's tumbled. There's been wild volatility in the pork market, and it's been so difficult because of the tariff talks with China and even the NAFTA things. But the physical hog prices did turn down. Margins are slim. The non-commercial traders are increasing their short position. Even though it isn't that large of a short position, the fact that they're increasing it just tells us that the momentum's a little bit lower and the outlook doesn't look that good. There is like higher growth rates that suggests that the pig crop is likely to grow through the 2019 year, and that makes it difficult for pork production. It's going to be very high. That's going to put a lot of pressure on these markets. So we're going to watch that closely. So we basically gave back all that we had gained on Friday for the hog and pork production. If it continues to go up, we might see a little bit more suppression of that futures market. But we're going to watch that closely. It's still a lot of volatility, and a lot of things can happen between even just today and tomorrow. But this is going to be a very interesting week. That's all from the floor at the CME Group here in Chicago. I'm Virginia McGathey.